Hello and welcome to today's webinar. The webinar is titled Career Insights on Transaction Advisory Services. This webinar is co-hosted by the CFA Institute and CFA Society India. Let me first introduce myself. My name is Rajiv Radhakrishnan. I am currently the Chief Investment Officer for Fixed Income Funds at SBI Funds Management Limited. I have been on the board of the CFA Society India since last October, and I am in charge of the Career Services Committee at the society. Before I introduce the speaker for the day, let me just go through a few basic housekeeping notes for this particular session. As you are aware, the session would last about 60 minutes. We would be keeping after the presentation, we would be keeping about 15 minutes for Q&A. We would invite please feel free to post your questions throughout the presentation on the Q&A box at the bottom of the screen. And also, please do share the feedback on the session at the end of the presentation. So let me now straight away introduce our speaker for the day. Our speaker for this session is Ms. Sonia Bakshi. Sonia is the Director for Transaction Advisory Services at Holan Luki. She's been a member of the Transaction Advisory Services practice at the firm and has more than 20 years of experience across transaction advisory, valuation, financial modeling, and data analytics. Before joining Holan, Bakshi was an ED in the strategy and the transaction services line at EY Global Delivery Services. Sonia was also the GDS Western European Regional Lead for strategy and transactions. Prior to joining EY, she's had an experience at CRISIL, again in the same area of financial advisory and modeling. Sonia holds a Bachelor's of Commerce degree with honors from Delhi University and is a fellow chartered accountant with the ICAI. So I would now invite Ms. Sonia to start the presentation. Over to you, Sonia.
Thanks a lot, Rajiv. Thank you for the introduction. And thanks a lot to the CFA Society of India for inviting me and giving me the opportunity to share some bit of my knowledge and views around transaction advisory. I think during the course of the last few conversations, I learned that the CFA Society has been doing this phenomenal work of holding such sessions for probably a very long time. And it's really commendable the way you're facilitating this exchange of knowledge and experiences and helping young professionals take better informed decisions. So yeah, kudos to you all and your teams. So yeah, for today, we have this very exciting topic of what transaction advisory services is all about. And hopefully by the end of this session, some of you or all of you would be better informed about TAS and maybe have some takeaways to make a decision about building your careers in TAS. For me personally, I've spent more than 15 years in this world. It's a very fascinating world. It's very dynamic. So the world of M&A is hundreds of years, old. But the world of TAS, in the construct we know it today as a consulting work stream, is not that old. So from that context, I think TAS is still pretty young practice. It is evolving. And also it is taking in a lot of transformation, whether it comes from data analytics, whether it comes from better consulting practices, more ethical consulting, a lot of those drivers that are reshaping the consulting world today. So yeah, without much ado, let's get to know TAS better. Okay, so before we kind of go into the world of TAS, maybe a quick poll question for our understanding, just to understand what is the level of understanding of TAS in among today's audience. So yeah, how aware you all are about transaction advisory and what sort of career opportunities it offers. And there's no right and wrong answer. Please go ahead. Okay, we'll give it probably a few more seconds because I can see the bars changing. Okay. Okay, maybe Hardik, we can stop the poll. I think this probably to me is a good representation and not surprising at all. So there, I think a lot of you are somewhat aware. We live in a digital and information age. So of course, there's a lot of information out there, and I kind of am assuming, but most of you are young professionals starting your career in the finance and accounting world. So definitely, I would expect some of you to be aware, but it is absolutely okay if some of you are not at all aware, because I said it's still an emerging service. And another thing also is it's not as well defined or as standardized as some of the other financial and accounting services are. So with that, I think that's a good insight, and with that, probably we will help you all understand a little bit better about TAS and the skills it takes to make a successful career. Let's move on. So the way the session is going to be structured, there are going to be 4 parts. I think at the outset, I would probably want to spend a few minutes introducing TAS, what are the different offerings, who are the different providers, and there are a set of core offerings that just go with the name of TAS, but then there are a lot of adjacent offerings which also provide a lot of compelling opportunities to build your careers. We'll do a deep dive on select TAS offerings. It's a huge world, so I don't think we can cover all of the TAS offerings in one session, but probably some of those that can help you understand the space better. And then we'll talk a little bit more about what sort of skills are necessary or preferable to build a career in this space. And then, of course, happy to take the questions. So before we dive into TAS, I think it's very important to understand the world of M&A consulting and how it intertwines with the business growth cycles. So what you see here, it's a typical business growth life cycle. Now, of course, there can be a lot of exceptions to it. Some businesses, and especially in the modern professional and corporate world, businesses are always trying to kind of elongate their growth and maturity stages and come more quickly out of their turnaround phases. But typically, businesses would have a growth cycle starting from their inception to maturity, to growth to maturity, and then of course turnaround. At each of these stages, they also have different capital or financing needs, right, from seed capital to venture capital, growth equity. Then of course, more towards maturity phase, they'll be looking at LBOs, even public financial capital raising would come somewhere in the growth phase. And then, of course, they would need turnaround financing. The world of M&A actually plays very well across this life cycle. So sometimes there's a tendency to think of a merger or an acquisition as a one-time event, but in truth, companies need M&A consulting services, and they're always perpetually or consistently looking at different sort of transaction strategies. So while some companies may choose to get into acquisition pretty early on, even before their growth stage, whereas a lot of them would be looking at acquisition as they hit growth and they look at better market penetration or consolidation opportunities in the market. Then, of course, when they are close to their maturity stage, it is time. A lot of companies do internal reflections, whether it is better integration practices, restructuring their complex structures. And then, of course, again, there are opportunities for divestment, getting rid of their non-core or non-performing businesses, restructuring their businesses, even taking some insolvency advice to reinvent their growth strategies. What this means is, as consultants, there is always an opportunity for us to engage with our clients throughout this growth life cycle. So it hardly happens that we do a transaction and then we are out of the client's business. We are perpetually in touch with the clients, whether it is about acquisition or whether it is about integration or looking even at their periodic valuations, supporting their CFO functions. And I think over the course of next few minutes, you will understand this wider space. But yeah, this is ever evolving in a very, very dynamic world. So as M&A consultants, we are never short of opportunities, or we are never sitting idle waiting for clients to do their or make their next big decision. We're always working with them to kind of arrive at the next big decision. Now, moving on, taking a close look at a typical M&A life cycle. Now, this can be, of course, when we say M&A, it could be from an acquisition or a divestiture. And when we say acquisition, it actually is used interchangeably even with divestiture. So whether it is about acquiring a company or selling, your company or part of the company, typically the services are more or less similar, with some nuances, of course. But I think I'll be using some of those terms interchangeably. But yeah, during the course of one particular transaction, there are different phases that take place, and at each phase, there are different consultants, there are different advisors who come into play and who help the companies and the clients move through that transaction. So it all in the foremost starts with a strategy. The companies need to form their acquisition or divestment strategy. Why they want to acquire? What are the objectives? Is it for growth? Is it for consolidation? Is it for efficiency? Is it for IP or acquiring a new technology? So there has to be a particular strategy and a defined objective. That's where a lot of strategy consulting, starts to happen. And this is backed by very strong, research, whether it is on the market dynamics of the competitive landscape, on specific technologies or product landscape, etc. Now, once that strategy is shaped, then of course investment bankers are onboarded and they start working with the clients or with the companies to narrow it down, to find the right set of targets, or whether it's buyers or sellers who meet their objective. Now, pretty alongside the transaction advisory professionals also come into play. And some of the early work that we do from transaction advisory perspective is even giving opinions to clients in terms of whether they even should be looking at whether it's the right strategy they should be going ahead with. Is it the right time to kind of implement that strategy? Whether what sort of valuations they should be looking at? If it is a fund to fund transaction, if there are any regulatory risks or nuances related to it. But then from there on, the investment bankers and transaction advisory professionals, TAS professionals, kind of have a very intertwined role. So while investment bankers would continue to work on offers and negotiations and helping clients narrow down the bidders to probably one or two, that's where TAS professionals start to get deep into the transaction details, performing due diligence, which we are going to talk about shortly, helping with assessments, contracts, agreements, and of course, eventually helping with closing the deal. However, TAS does not stop here. Like I said, we continue to stay with the client much beyond a single transaction. There is a plethora of activity and support that the companies need in a post-deal world, whether it is related to integration, separation, valuation, value creation, etc. And then moving forward, again, of course, there could be needs to even divest that business. In a private equity world, this is their bread and butter. So at Holan Luki, a large part of the work we do is with private equity clientele and in the mid-market segment. So from our perspective, our clients are always looking at transactions. They're always looking either to enter or to create value or to exit. And we're always working with them throughout all those phases. So the small arrow at the end of transaction advisory basically implies that it doesn't end here, but even the post-deal scenario, we help them prepare for exits and for reinvestment. So yeah, something is always happening in our world with our clients. So what does TAS do? Why is it important? And to be, like I said, to be very fair, it's not a legacy, business. It's not very old. So in, many decades back, probably auditors would do part of this work, or investment bankers would be doing, transaction advisory work. But then as businesses got more complex, it was realized that some of the advice that was required from a transaction advisory perspective was not coming through. So history is made up of a lot of examples of failed transactions that did not go through, or deals that did not yield the required objectives or results because the transaction advisory component was either missing or it was too weak. Just to cite a few examples, probably a lot of you would recall Bharti Airtel's acquisition of Zain Africa a few years back. And the excitement of getting into the new market probably in some way kind of overtook the focus there that there should have been on due diligence or arriving at the right valuation, with the result that it took years, and probably even still it has never been regarded as a successful acquisition for Bharti. Globally, again, there are many more with probably multifold dollar implications. Caterpillar acquired a company, a Chinese coal energy company, with the intent of getting or making the most of entering into the Chinese coal market. However, there were certain accounting frauds with that company which were just kind of missed. Because of that, that whole acquisition value had to be written off within a space of 1 year. So the same year, the whole acquisition value got written off. And there are a lot of those such examples out there. And that is why this, I think, understanding of having specialized professionals to look at the authenticity of a transaction from different lens was regarded as a very important driving factor for to make a successful transaction. Now, when we work with our clients as TAS professionals, of course, we are servicing our clients who are either buyers or sellers or the investors in those companies. But in all honesty, they are not just the stakeholders we work with. We, as TAS professionals, are responsible for a number of stakeholders who may not even interact with us, but they are going to consume the opinions that we are going to give. They are going to rely their decisions based on the advice we provide to our clients, and therefore it becomes very important to understand that it is not just the buyer, seller, and the investors who pay us for our services. They are not the only stakeholders. The lenders will inadvertently be impacted by any sort of transaction. The regulators are always keeping a watch, whether it is related to accounting practices or ethical, deal practices, or there are industry regulators or market regulators that are always watching major transactions and how these are being screened before being given effect. The employees of the organizations, they are like the silent stakeholders. They probably bear the brunt of failed transactions more than anybody else. And consumers in public at large. And you all live in this world where social media plays such a important role. And any transaction that is not in the larger interest of the consumers or the public has a very high risk of failing in the long term. So there are a lot of questions, these very critical, fundamental questions that we help answer for a range of stakeholders that I just talked about. First thing, whether it's the financial and the operational health of the company is true to what is being presented. I think that's the most important element that we look at. What are the risks associated with the transaction? If the companies are following accounting policies or procedures that are in line with acceptable standards. And a lot of times, especially in the work that I and my team do, especially with mid-market segment, it's quite possible that the accounting policies are not aligned with the most acceptable standards. But even giving that advice to our clients means they're getting into that transaction by being aware that there could be deviations, there could be inconsistencies. So at least we are giving that piece of very important information to our clients. Now, what are the potential synergies or growth opportunities that the clients could look at leveraging? How the key financial metrics would eventually work? What are the valuation? Of course, the whole exciting art of valuation. So, what is the right valuation, and is it in line with? There's no right or wrong, but is it aligned to the buyer's strategy and the buyer's objective? Then it's not just financial. I think you'll soon learn, while we associate transaction advisory or M&A more often than not for financial and accounting assessment, but it goes well beyond that. So there are operational matters that we look at, environment, social, legal, regulatory. I think it's a diverse set of assessments that we have to make. And then post-deal, now once you've made the transaction, what sort of post-integration plan is required? How do you even allocate your purchase price to different asset classes? So these are some of the representative questions that we typically help our clients answer, and that makes our job exciting every day. Now, I've been kind of putting a lot of impetus on the diversity of TAS services. And what you see on this page is probably not even exhaustive. There could be a lot more that can be added in terms of what typically TAS offerings are. However, one differentiation is very important, especially when you're looking at making a career decision. TAS is defined very differently by different organizations. So it's not like assurance or tax advisory where it's guided by a set of uh, regulations or set of practices, or there's a rule book to it. TAS is a world where every day there are new dimensions being added to a lot of the work that we do. So a good way to look at it probably would be that there are certain core services that almost all TAS organizations would have within their purview, even if they call them by different nomenclature. But typically, the green boxes that you see here, these are the service offerings that largely would fall under the TAS space. But then there are many adjacent services which typically may not be TAS, but certain organizations, may either choose to combine them with their TAS offerings, or even if they are kept separate, there is a very strong intersection with transaction advisory. And from a career building point of view, I think it's possible to kind of play around and move from one dimension to another in a long run. Now, of course, the specialization is always very important to me, but this is like the art of possible. So, if one of you works, let's say, in due diligence world for a couple of years, and you think you want to kind of diversify and move to, let's say, valuation world, it's possible if you are part of the broader TAS world and you know how these services and how these offerings connect with each other. So typically, on a scale of deal life cycle, and you hear me repeating this pretty frequently because that's how it plays in your mind in terms of pre-deal to deal execution, post-deal, and then of course the hold and the exit phase. So if you look at these four phases, in the pre-deal phase, of course, I talked about opinion. So that's typically a very well-defined transaction offering. But then we have valuation, modeling, accounting advisory that have a critical role to play in that stage. On our strategy and commercial due diligence, sometimes is obviously taken up by specialized strategy consultants. But in like EY, I spent more than 10 years there. Or EY strategy and transactions practice actually acquired a strategy boutique firm a few years back, and they extended their TAS practice to the strategy and transactions broader space. Commercial due diligence is again looking at a transaction from commercial viability before you even make a decision, whether to go ahead or not. Or deal execution, which is broadly diligence and fair bit of legal and contracting services. So that all typically falls at the core of the heart of transaction advisory. And then in the post-deal world, you again have valuation, financial separations and integrations, accounting advisory. But at the same time, there is a role for tax advisory, IT cyber advisory. A lot of operational elements, come into play, and working with CFOs or CTOs or C-level officers in that space. And then, of course, beyond that, value creation, whether in tracking synergies, whether those synergies that were kind of planned at the outset, whether they are getting realized in the right way or not. And then eventually starting to prepare companies either for IPOs or sell sides and so forth. But yeah, working capital advisory is a big emerging area, how to kind of advise companies to better manage their working capital or better manage their operational efficiencies or monitor their portfolio. So all of these gray boxes are adjacent to core TAS offerings, but I think for the ease of understanding, you can assume from a career building opportunity, it's the broader set that you can look at. All of this is underpinned by very strong research and, of course, growing impetus on data analytics and automation that we're again going to briefly touch upon. So who provides these services? Again, like the definition of TAS, this is also pretty diverse. So of course, most of the audit accounting firms, whether they're big fours or the big tens, whatever we want to call them, and even if they're not big, like mid-sized firms as well, most of them would, in today's world, have a transaction advisory practice, especially services like financial due diligence, accounting advisory, financial integration. They align very well with the audit and accounting world. Then, like I mentioned, there are strategy consulting firms which would play in different zones across that transaction lifecycle. There are boutique M&A firms that solely focus on M&A. But between that also, they may specialize in some of these versus trying to do everything. A lot of services that I refer to are not even related to like finance accounts. Like they could require very specialized IT skills, operational skills, legal skills. So there are again a range of these specialized consultings that play in the M&A world, but then their focus is the specialized area which they play into. So if it's a law firm, they are also engaged in an M&A world, but as legal providers. Similarly for IT, tax, etc. Then a lot of highly acquisitive corporates these days have started to have their in-house transaction advisory teams that kind of take care of probably more plain vanilla, less complex transactions. But wherever the complexity increases, they would usually work with external consultants. And the last but not the least, the blue circle that you see here is investment banks. Now, this is honestly not very commonplace. Most of the investment banks do not get into advisory, but that is starting to change. And I think my own firm today, Holan Luki, probably we would be uh, the only or one of the leading, investment bankers who have very well integrated transaction advisory practice on an investment banking platform, and that's again very widely recognized and appreciated by our clients because we bring in like the whole end to end M&A consulting space for our clients. Also, it is we bring, like, unlike accounting auditors who are more focused on the accounting compliances, we bring a greater element of commercial approach to a lot of transactions and advisory businesses. So there could be, of course, more that you can add, but broadly, this is the landscape of providers, and you can go back and research on who are the big players in each of these spaces, and then which of these work stream aligns well with your long-term career plans. I just wanted to quickly spend probably a few seconds and on Holan Luki's financial and valuation advisory. And this would go back to what I've been saying. The terminology can vary a lot. So financial and valuation advisory in our firm is basically our advisory business. And you can see it has transaction advisory as a subset where there are specific services around due diligence, accounting advisory, lender services, and then of course more specialized like tax, technology, ESG. But then there is a valuation advisory or a portfolio valuation, a corporate valuation, board advisory. Now, in a sense, this is the transaction advisory world, but within Holyhorn, we call it financial and valuation advisory. So I think when you're looking at these terminologies, it is always good to go and check what those terminologies or entail, what are the services, and probably it could be very different from what you understand of TAS, but in a sense, it could be TAS services. So it's very important to understand how each organization or company that plays in this space define their TAS practice. Okay, before we move, I think there's been a lot of content load, so maybe good time for a poll question. We've talked about a lot of core and adjacent TAS services. Go on and select which of these you think are core. And you can select multiple. Okay, let's give a few more seconds. Let's see. Due diligence and valuation are almost neck to neck in the lead. Assurance is finding some space. Okay, maybe couple of seconds more. Yeah, should be good. I think if you can just end the poll. Okay, yeah, of course, no surprises about due diligence valuation. I just talked a lot about these two. So they definitely are the core of transaction advisory. Also, some of the core services that probably are slightly lagging behind in the poll. Another one is integration. Integration services are so fundamental to making a transaction successful, and it's also a space where mostly you'll see TAS professionals, taking a lead, unlike accountants or investment bankers, etc. However, because of the changing landscape, IT advisory, which I see here falling behind, IT advisory and restructuring are getting more and more integrated, especially with the role of IT and cyber in the core businesses for most of the companies. Assurance, however, is typically not transaction advisory. In fact, there has to be a clear divide between assurance and any sort of advisory business. So assurance players are not supposed to give any advice. Auditors are not supposed to give any advice to their clients. And then similarly, advisors are not supposed to play an auditor's role. So assurance is completely out of question just because of the conflict in nature of the two work streams. But great, thanks for participating. I think we can move on. Now we'll take a quick deep dive on some of the TAS offerings. This could be a lot of information, so I'll just keep it a little high level and just to help you understand what these services are about. First, of course, financial tax due diligence. Like most of you voted, valuation and financial due diligence are some of the most imminent, transactions or advisory services. What do we do in FDD, like we call it in short? Financial due diligence is it's basically an extensive check on the financial and operational health of a company. Like I said, there's so much at stake, and there have been so many instances of transactions failed because a proper due diligence was not done. That most of the buyers today are extremely cognizant about knowing the authenticity of what is presented to them by the seller. So typically, what we cover here is the quality of quality of a company's information, even their accounting policies, procedures, their internal control policies, their reporting processes. How strong are these? This is fundamental to even assessing whether the accounting or the financial information being shared can be relied upon or not. Secondly, quality of earnings. This is like the heart of FTD. So from both a valuation perspective and a transactions, success rate perspective, it is important to know what is the sustainable earnings that a business is likely to make. And sometimes reported earnings, even the best managed of the businesses, could have elements of non-recurring incomes or non-recurring expenses. Their revenue recognition practices may not be aligned with the buyer's preferences or buyer's practices. So a lot of these anomalies typically happen without any sort of fraudulent. So we are not indicating here any fraudulent practice, but generally it is important to know what the sustainable EBITDA profitability levels are going to be. In certain cases, we look at revenue, especially where these are these businesses are not profitable, and a lot of us have read last few months about the startup valuations and how some of those very promising revenue and numbers just started to fall apart very quickly. Therefore, assessing what is the sustainable level of revenue or earnings is absolutely critical. And then for certain sectors which also have, which have a balance sheet driven business, it's important to know what the, levels of working capital would be required. If there is a certain level of inventory that the company is carrying, is it the real inventory? Is it something that the buyer can attach value to? Or what could be some off balance sheet items that may play in, buyers against a buyer's objective subsequent to the close. And then, of course, tax due diligence is all about tax attributes and tax risks. Apart from this, in due diligence, we also look at how best to structure a transaction. So no buyer is going to upfront pay everything because there's so many like contingencies that could emerge, which then are addressed through earnouts, which are deferred payments, or even some contingency plans are inbuilt into the agreements. So the structuring of the transaction is equally important as the valuation or the other important variables that go into a transaction. The other, I think, big favorite that came out of the poll, valuation. Now, valuation plays in so many facets across a transaction life cycle. In free deal, even before you enter into a deal, it is important to have a valuation perspective. Now, this is usually probably an intersection of investment banking and transaction advisory, where investment bankers generally look at more market-driven valuations, whereas task professionals would look at more fundamental approach to valuations to arriving at the company's enterprise value. And then, of course, tax professionals do look at it from a tax valuation perspective. But once the deal is closed, there are so many intricacies related to valuation. How do we allocate that enterprise value to different like asset classes? How do we create an opening balance sheet, which then can be relied upon? Uh, how do we account for the premium that the buyer has paid over the net asset value that has been acquired? And how do we address for tax implications coming from the transactions? Similarly, this doesn't end here. It continues even beyond a transaction is fully integrated. For a lot of investment managers or private equity, they need to market or arrive at fair value of their investments every quarter, or definitely once a year. Goodwill and a lot of intangible assets need to be tested in line with accounting standards, again, at least once every year. The management and the investors need to know what the value of their investments or their particular share is. So this continues well after the transaction. And then there are so many specialized asset classes where the principles of valuation play differently. For example, for real estate or for fixed assets or for complex structured products. And those again, within the valuation world, they need more specialized knowledge. It's always possible to start from a fundamental level and then get more and more specialized. Or it is also possible to start at the outset from a specialized level, let's say becoming a real estate valuation expert. So these are some of the things from a career perspective. Again, very important for you all to know how you can play around and play on different dimensions before you kind of start decide to specialize on one. I think the next few I'm going to go pretty quickly because I want to spend some time talking about the career in dimensions. Accounting advisory again, basically in principle, it relates to helping clients address complex accounting matters, whether it is in the course of a merger acquisition, divestiture, or getting them prepared for IPOs. Similarly, in distress situations, and then helping CFOs manage their accounting and finance functions on an ongoing basis. Like transaction opinion, I already touched upon. It could be assessment of the fairness of a transaction. Now, the fairness could be to the minority shareholders, to the lenders, or of course to the company itself as an identity. Fund opinion is related to fund transactions play. Solvency, if the company is even liquid enough, solvent enough to be considered, or it is meeting its capital adequacy norms, etc. And then valuation, of course, I believe you all understand whether it's a fair valuation to be looking at. Typically, we advise the board. Now, one thing to know about opinion also is it is one of the most, I would say, complex and high risk services in the TAS world. So it needs very extensive expertise, financial, accounting, valuation matters, but at the same time also the depth of being able to advise, our clients on their acquisition plan. So it is one of the most highly rated, I would say, services even in our world of TAS. Post-deal integration is very diverse. So you can't really get into this world on one channel. So you could be a financial, expert helping with post-deal financial integration. You could be a strategy expert helping with, 100-day plan or synergy identification or an integration strategy. What basically a 100-day plan, just for all of you, is typically in TAS world, 100-day plans are made for the acquirer to integrate or, of course, the seller to disintegrate their businesses over the period of 100 days from the close of the transaction and be operationally ready for their next phase. So that those 100 days typically are considered to be very critical, and they define how well the post integration plan will lay out in the subsequent months. Then dealing with a lot of regulatory change management, antitrust laws in any country. So you could be probably an expert in that area and work in this space. Then value creation, like that's the fundamental objective of any transaction, to create value, consolidate, acquire a new product strategy or a pricing strategy, and of course get synergies, either it is through cost or through operational decisions. Running a lot of performance improvement plan, again, plays pretty heavily in this space. So I would say one of the most diverse spaces in the TAS world. Not just diversity of services, but also diversity of a lot of skills plays out here. And we often see people from IT, operations, cyber, a lot of specialists play in this. Last but not the least, data analytics. It's difficult to talk about anything in today's world and not touch upon data analytics or automation or AI, the new buzzword. So TAS is no exception. I think there are widespread transformations happening in almost every sphere that I've talked about so far because of these new age technologies. However, there is a spectrum. I think two things before you or start to associate data analytics, two things to always remember. Firstly, some of these changes are so transformational, like AI, but at the same time, all of our stakeholders need to be ready to adapt those changes. And we need to give time to all of those stakeholders. Other than that, this is a pretty high risk and highly confidential, space where we play in. So there is a degree of caution, and there is also that realization that we'll have to let some of these technologies play out before putting a lot of reliance on it. So AI for me comes in that space. However, the other spectrum, which is tools to process data faster, to bring in efficiencies, add value, drive insights, or better present data through means of visualization tools, whether it's Tableau, Power BI, or kind of do better modeling of data so that you have that speed to market or speed to taking a decision, whether it's through Python or Alteryx, and then of course automating some of the repetitive and non-value add tasks. This space, I think the first four boxes are here to have. I think the best bet right now for any professional in TAS would be to integrate these with some of their functional skills. At the same time, continuously watching for the big scale transformations that it's anyone's guess what can come through AI in coming years. But yeah, I think the importance of the first four needs to be held pretty strong in the short term, definitely. The other thing to remember also is that our clients don't pay us for data, they pay us for their advice. And it is the advice at the end of the day that matters most. So we may get the best results from data, but if we cannot convert that to an advice for our clients, we will be falling short. So that tendency to build an advice based on data is equally critical. And it comes with time and experience. Okay, time for a couple of poll questions. So which among these are not typically included in financial due diligence? Again, you can select multiple. Okay. Give probably a couple of seconds. Okay, I think we are good. This seems to be a good representation. Incidentally, quality of investor return and quality of future revenue. I think probably the top two are not the typical scope of financial due diligence. Remember, financial due diligence is all about assessing the financial performance of a company in past to know sustainable level of revenue or sustainable level of earnings. Future revenue is not typically in the scope of financial due diligence. In valuation, yes, but not in financial due diligence. Quality of earnings is, in fact, at the heart of it. Similarly, quality of investor return becomes very specific to the investors because every investor could have different thresholds of their return. So yeah, quality of earnings, quality of net assets, and quality of information. These are the three typical scopes of financial due diligence. Okay. One more poll question. So what are the common ways of realizing growth and synergies post a transaction? In what way the companies typically realize synergies? Again, you can select multiple options. Maybe a couple of seconds more. I can see the bars moving. Okay. Cool. So definitely product and pricing strategy. I see that's one of the top selections.
Sorry, we can't hear you. Can you make it full screen? No, we are not able to hear you. Rajiv, is this the same for you as well?
Yeah, I can't hear Sonia now. Sonia, I guess you are on mute.
I wasn't.
Yeah, now it's fine. I can hear you.
Okay, great. Thank you. Sorry, I just lost power for a couple of seconds. There was some disruption. But yeah, product pricing strategy, performance improvement, organization structure redesign, all three of them definitely are the right answers. So yeah, bang on there. Okay, now I realize we are a bit behind on time and there could be a few questions. I can just spend, Rajiv, if it's okay, a minute on this and then maybe take up a few questions if that's okay.
Yeah, sure. In fact, this is one of the questions that I sort of... It's okay, you can go ahead. Yeah.
Okay. So yeah, what is required to, and especially with, this sort of wide and diverse space of TAS, what is required to make a successful career? So typically it will be, I would say, an semblance of course, technical skills. Now I'm saying here technical, not just accounting finance, because it could be a combination of one of two of technical skills. Data skills, I think the two on the left side are definitely, paramount in today's world. But then to grow it over a long period of time, like any other profession, you need, strong project management and eventually, of course, strong leadership skills. Now, the technical skills could range from, like I said, finance, accounting, valuation, modeling, to specialized functions like tax, IT, operations, ESG. Data, it could be, again, whether you specialize in data, processing, data visualization, automation, or you're already starting to venture out into the world of AI, fabulous. I think there is a space for all of those skills in TAS offerings. But eventually, as you grow with the levels, the value of knowing industry, whether it is through business models or the key performance indicators, know about the market and the industry trends, how the macroeconomic factors play into the world of M&A. And then eventually, like I stressed on, the ability to convert all of this into solution and recommendations for a client, eventually that makes you a strong task professional. However, the phases could be different. So typically in the early stage to begin your career, it's important to have a combination of one of these, the top left box. As you advance, you'll start going into, of course, industry, more analytical and advisory skills. Data right now is at intersection. So it can be a starting point, but if it is not at the starting, eventually you have to include that as part of your advanced skills, just given how the space is getting reshaped. And then on the right, of course, moving from project ownership, communication, like any other stream, is a very big part. And then eventually, as you grow into the roles, managing a team, developing your team members, client and business development is where the long-term careers are actually built. Rajiv, does that address the question? And anything related to this that you want me to cover?
Yeah, I think that broadly covers that question with this. But if you could just bring in the element of where do you think CFA charter holders could fit in terms of a career in transaction advisory services area?
Absolutely. Sure, Rajiv. So I think, of course, finance being on top, it
Yeah,
has a reason, right?
right.
I and a lot of services we talked about, like financial diligence or valuation or accounting advisory, all of these play very well into, the CFA space. Valuation, of course, CFA
Mhm.
plays kind of right into the valuation play. But even things like financial diligence, we have a greater reception for, CFA holders now, for the reason because accounting is just one part of it, but we need that financial acumen for our professionals to be able to, make the right interpretations. And it is said that you can always learn accounting through book, but to learn finance, you really have to apply so much knowledge.
Right.
So I think that's something where I think CFA holders can play very well in. The other thing, what I kind of alluded to earlier also is just given how TAS is shaped, there is always a possibility to kind of expand your horizon horizontally. So it's not just vertical growth. So, like in my team, I have a lot of CPAs who are doing their CFAs alongside because they want to also kind of expand from doing financial due diligence or accounting advisory to probably move into valuations or financial integrations, or even transaction opinions. So I think that sort of intersection is very
Okay.
important to know, and CFAs can very well kind of take advantage of that.
A related question, in fact. So, when you're working on a specific deal, what typically would be the team structure in terms of number of personnel, and what sort of various verticals are involved in a typical transaction?
Sure. I'll take the second part first. What sort of
Yeah.
verticals are involved? Now, there are few that will always be there. I mean, that's what clients definitely need, which is like typically financial due diligence or valuation. Now, there are specialized teams in like bigger organizations. They may not always be working on the same transaction all the time because
Okay.
sometimes clients prefer to have some other provider for financial diligence and another one for valuation. But usually, these components would typically always play. Uh, Again, because of the complexities, there would always be advisors for post-deal integration plans, especially on the financial side, and then specialists for tax, IT, etc. So all of these are usually different work streams. Now, as a single provider may not be playing in all of these. Even Big Fours, for example, on a single
Mhm.
transaction may not be doing everything, despite their complex and big presence in all of these spheres. So the specialization is what counts. Like in from Holan Luki, if I have to talk, we are highly recognized for our transaction opinions. That's also a space, let's say, for accounting firms where they get into conflict. So that's something where usually, clients will get a specialized provider. But all of these would form different work streams. Sometimes they run parallel, sometimes they run one after the other.
Okay.
In terms of the structure of the team, and I'll jump to the next page. Now, usually this is a career path for anyone in the TAS world to move. So first, initial about 0 to 3, 4 years are spent kind of building your functional, competency. So working on projects, delivering projects, and gaining kind of in-depth knowledge about your own domain. But as you move along, like typically seniors, consultants, associates, they're known by different terminologies, would start taking ownership of projects. And then as you get into manager role, of course, you are taking ownership for the complete work stream. And if it's a mid-sized deal in our world, the complete deal basically is owned by manager. And then of course, senior managers and partners would come for broader oversight, and they bring in like their expertise and manage client relations and business development. Now, the structure depends on two things: the deal size and the deal complexity. And I'll give two examples. One is a mid-sized, buy-sized deals that gets started and done in like 4 to 5 weeks, which means usually a combination of analysts and associates would comprise about 50-60% of the team. Managers would be about 20%, and then director and senior manager combination is about 10 to 15% of the time. So there is very heavy reliance on analysts and associates to kind of execute work in the sharpest way possible. But the other kind of deals would be large, sell sides that run over many months, or large mergers that run over like many years, in fact. Those teams are very dynamic, and typically they would have multiple managers. They would have multiple, senior managers. In that case, that combination could be maybe 40, 30, and 20 for senior managers. And then typically 10% time would always come from a partner or
Okay. In fact, there's one interesting question that sort of came in the chat box. It was related to how do you provide an advisory or on evaluation of a loss-making startup? So, what are the challenges that you typically face in such transactions?
Yeah. I think foremost it is important to understand why a buyer would be interested in a loss-making startup. That is the fundamental
Right.
question to ask.
Right.
And there are a variety of answers. First is there could be a technology. They could have a customer base. They could have, some unique positioning in the market. So usually in such a case, the advice is more based on what the buyer is looking to acquire rather than all necessarily the financial parameters. And again, for example, we need to look at what the commercial, relevance of that, let's say, technology or that market is. A lot of times we do customer churn and see, large part of the revenue is coming from just few customers, which makes the business so vulnerable. So we kind of then add those caveats to our, advice, saying that while business is doing good, but it's just two customers who are driving it. If you lose one of those customers, the business, tanks. Beware of those. The other thing also related to this question is if it's loss making, you need to understand the reasons. Maybe it is at a stage where there are operational efficiencies have not been leveraged yet. But from a revenue and a market standpoint, it still has a very strong viability. So in that case, the buyer's objective and our advice is more towards how do you bring in efficiency, how do you run performance improvement plans to turn it into a profitable business.
We have time for a couple of questions more. In fact, you did mention about the entire life cycle and in terms of various steps in the entire advisory process. So, in this, how do you deal with risk? In, say, for example, misrepresentation in the financial statements or fraud that sort of comes later on. Some of those are probably no apparent later on, right? I mean, so as an advisor, how are you covered with respect to some of these risk factors?
Yeah.
And what are the mitigants that you sort of
Yeah.
try to build in when you engage with a acquisition target?
Exactly. So it's very important to have those, appropriately covered in the engagement letters we do with our clients. And we have legal teams, compliance teams. Every organization has those set of legal and compliance advisors who are whose job is to make sure that they help us cover that risk. However, the risk can come in two forms. One of it is if it was apparent or if it was discoverable and the teams failed to discover it. There is no mitigation for that, honestly. You have to own it. It's a
Okay.
huge reputational risk.
Reputational risk, yeah.
Yeah, the best way to do it is have quality procedures. And that is where there's a lot of impetus in most of the task practices on quality procedures. So every person's work has to be reviewed by somebody. We don't ever send anything to the client, unless it has been thoroughly reviewed. In a lot of complex deals, engagements, there needs to be two level of even partner review. So
Okay.
even partner review has to be, peer reviewed. Um, if it is not being discoverable, then of course it needs to be well embedded into our engagement letters and clauses, which our legal teams are good at taking care of.
Okay. And maybe the final question is just a broader macro question, in fact. So what are the trends that you see in terms of M&A activity in India, say maybe this calendar year, and compared to what probably would have been the trend over the last couple of years? And again, related to this, what are the typical or the common factors that influence an M&A transaction from the Indian context?
Okay, sure. So yeah, of course, global M&A world is going through, I think, a bit of a tough phase right now, but that's not a surprise. M&A will always be cyclical. In fact, the good part is that these cycles, especially the downturns, they are being better managed now because of very active policies, monetary policies, and interventions, and they're becoming like less intense, especially after the last Great Recession of 2008 and 9. So I think there is less, of course, there is caution, but there's less concern in the global fraternity. It's like just everybody waiting for the market to turn
Okay.
and
Yeah.
interest rates to happen sooner than later. Now, India, of course, is a pleasant, I would say, outlier in the sense that the market generally has been booming, and there is, in principle, a lot of interest. Historically, it has been driven mostly by foreign investors, but one trend that is starting to reshape Indian M&A is that there's a lot of domestic investment now fueling this. um, Over the last 10 years specifically. Now, of course, we're just coming out of an election season, so we'll have to see how the next few years get defined. But typically, there's very strong resilience. Another thing which helps us also is our monetary policies are typically, very balanced, which kind of plays very well into both international and domestic market. Having said that, we are still a very nascent M&A market. Private equity world over, M&As are very, very heavily driven by private equities and private credit. Those markets in India are still early stage, and there is fair bit of work to be done around creating that trust from financial and regulatory perspective for especially private equity and credit. So strategic market for our strategic acquisitions are going pretty strong, but what we are seeing is the private equity and credit space still has way to go.
Okay. So
And
that's
that happens.
thanks, Sonia, a lot. In fact, thanks for taking time out and providing a very detailed perspective on your area of work, which is transaction advisory services. And I'm sure the participants have benefited immensely from the session. In fact, a lot of questions were actually covered, which I had and which sort of came in through the chat box, were covered in your presentation in very minute details. So once again, thanks a lot for taking out your time and sharing your insights on this field.